The IRS is now using artificial intelligence to hunt down tax evaders with surgical precision, and they're getting scary good at it. Let me paint you a picture of what just happened. Congress basically told the IRS, hey, we're cutting your budget and your staff, but we still want you to collect more taxes. Figure it out. And you know what the IRS did? They turned to artificial intelligence. Here's the concerning part. They're not just using basic computer programs. We're talking about advanced machine learning systems that can analyze millions of tax returns in seconds, spot patterns that human auditors would never catch, and identify exactly which taxpayers are most likely to owe additional taxes. And this isn't some future plan, this is happening right now. As I'm making this video, the IRS has already used AI to target 75 of the largest business partnerships in America, averaging $10 billion in assets each. They've created what's essentially an AI-powered strike force that's going after hedge funds, real estate partnerships, and law firms. But here's the thing, if you think this is only about mega wealthy people, you could be wrong. This technology is scalable and it's likely coming for everyone. Let me explain more with chapter number 1, how the AI works. But really quick before I move on, if we haven't met yet, I'm Sean's clone, a licensed tax professional who personally researches and writes every script you see from me. And while Sean is helping people save on taxes, I'm here to share his knowledge with you. But if you have any questions, the real Sean reads every single comment and tries to respond to most. Also, if you need help with tax planning, click the link below to get a free consultation to start saving more money before the tax year ends. Chapter number 1, how the AI works. Let me explain what we believe about how the IRS AI system operates, because understanding this is crucial to protecting yourself. The AI doesn't just look at your current tax return. It's analyzing years of your filing history, cross-referencing it with third-party data, and looking for inconsistencies or patterns that suggest underreported income. For example, let's say you're a freelancer who reports $50,000 in income on your tax return. The AI likely compares your deduction patterns to thousands of other businesses in your industry and notices you're claiming significantly more than average. That's a potential flag. The concerning part is that this AI is learning constantly. Every audit they conduct teaches the system to get better at identifying tax issues. It's like having an auditor that never sleeps, never gets tired, and gets smarter every single day. They're using something called machine learning to analyze Schedule K-1 filings, financial statements, and what they call big data to score taxpayers on compliance risk. If you score poorly, you might get what they call a soft notice, or you could get selected for a full audit. And here's what's really concerning. The Treasury Inspector General found that the IRS's old audit selection methods were basically terrible. A huge percentage of audits ended with no changes to the tax owed, meaning they were harassing compliant taxpayers for no reason. But now, with AI targeting, their hit rate could be much higher. When they come for you, they're probably going to find something. Let's move on to chapter number 2 and discuss what this means for regular taxpayers. Now, you might be thinking, this all sounds like it's targeting rich people and big businesses. I'm just a regular person with a W-2. This doesn't affect me. That might not be accurate. The IRS has explicitly stated that audit rates for people making under $400,000 won't increase. But here's what they're not telling you. The audit rates don't need to increase if the audits become more targeted and effective. Instead of auditing 100 random people and finding problems with 20 of them, they could now use AI to audit 30 people and find problems with 25 of them. Same number of problem cases found, but way more efficient. Plus, the AI isn't just being used for audits, they're using it for fraud detection, identity theft prevention, and customer service. The AI is also being used to process your returns faster and potentially flag them for issues before they're even approved. So even if you never get audited, AI is likely analyzing your return and potentially flagging it for manual review. The bottom line is this. Whether you make $30,000 or $3 million, AI is now probably looking at your tax return and deciding whether you're being honest. Chapter number 3, the technology behind the curtain. But how is this all possible? Let me break down the technology they're using. They're using something called natural language processing to analyze text in your tax returns and correspondence. This AI can read through complex financial documents and understand the context and meaning. They're likely using pattern recognition to compare your filing to millions of other similar taxpayers and identify anomalies. If your deductions, income, or filing patterns don't match what the AI expects, you might get flagged. They're using predictive analytics to forecast which taxpayers are most likely to owe additional taxes. The AI likely doesn't just look at what you've done, it probably predicts what you might do based on patterns from similar taxpayers. They're also likely using what's called optical character recognition to digitize and analyze paper documents faster than ever before. If you still file paper returns, AI is reading them and analyzing them just like electronic returns. Chapter number 4, red flags that might trigger the AI. All right, now let's get into the meat of this video, the specific things that could potentially get you flagged by the IRS AI system. Pay attention to this section because this could literally save you thousands of dollars. Now, the truth is, not much has changed with the actual red flags. However, with AI, the detection system is smarter than before. Here's what it's looking for. First, let's talk about income inconsistencies. The biggest red flag is when your reported income doesn't match your records with what was reported to the IRS. AI could likely look up these reports faster and more accurately than before. Next, we have unusual business deductions. If you're claiming business deductions that are significantly higher than average for your industry, you're likely going to get flagged. Then there's the issue of round numbers. This might sound crazy, but too many round numbers could be a red flag. If all your expenses are $500, $1,000, $2,000, that might look suspicious to the algorithm because real expenses usually aren't perfectly round. We also need to consider charitable deductions. Large charitable deductions relative to your income are a major red flag. Most people donate between 2 to 3% of their income to charity. If you're claiming to donate 50% of your income, you'll likely need bulletproof documentation. Lastly, there are frequent address changes. People who change addresses frequently, especially around tax time, could get flagged as potential fraud risks. The AI might see this as a pattern associated with identity theft and tax fraud. Chapter number 5, how to audit proof your taxes. If you are concerned about this, then let me ease your worries with some practical advice on how to protect yourself. Now that you know what might trigger the AI, let me give you a complete guide to making your tax return as audit proof as possible. The first thing you need to do is keep perfect records. This cannot be overstated. In the age of AI audits, documentation is everything. Keep receipts, bank statements, contracts, invoices, and any other financial records for at least 7 years. The AI might flag you, but good documentation will likely save you. Scan everything to digital format and organize it by year and category. Use accounting software like QuickBooks to track business expenses in real time. The more organized and detailed your records, the better. Second, be consistent year to year. The AI could be looking for sudden changes in your filing patterns. If you usually take a $5,000 home office deduction and suddenly claim $15,000, that could raise flags. Make sure any significant changes in your tax situation are well documented and legitimate. Third, report all income. This is absolutely critical. The AI could have access to all the same 1099s, W-2s, and other income reporting documents that you receive. If you don't report income that the IRS already knows about, you're likely to get flagged. This includes side gigs, freelance work, rental income, investment gains, and especially cryptocurrency transactions. The IRS gets copies of all these reports and the AI will likely immediately flag any discrepancies. Fourth, be conservative with deductions. Look, I'm not saying don't take legitimate deductions, but in the age of AI audits, you need to be extra careful. Only take deductions you can fully support with documentation and make sure they're reasonable relative to your income and industry standards. Finally, file on time. Late returns usually get more scrutiny. File your returns by the deadline or file for an extension if you need more time. Don't just file late without an extension. Chapter number 6, what to do if you get audited. Even if you do all this, there's a chance you still get chosen for a randomized audit. So let's discuss what you should do if that happens. Okay, so despite your best efforts, the AI has flagged you and you're facing an audit. Don't panic. Here's exactly what you need to do to get through this successfully. First, don't ignore it and respond fast. The worst thing you can do is ignore audit notices. The IRS will assume you agree with their proposed changes and assess additional taxes, penalties, and interest. Respond to every notice within the specified time frame. Plus, the faster you respond with real-time proof and documentation, the more likely you are to pass the audit. Next, understand what type of audit you're facing. There are 3 main types. Correspondence audits, which are handled by mail, office audits where you go to an IRS office, and field audits where they come to you. Most AI flagged audits probably start as correspondence audits. Also, consider getting professional help. Unless it's a very simple correspondence audit about a missing form, you should consider hiring a tax professional. This could be a CPA, enrolled agent, or a tax attorney. Only provide what's requested. Don't volunteer additional information or documentation beyond what the auditor specifically requests. Answer questions directly and honestly, but don't elaborate unnecessarily. Remember to understand your rights. You have the right to be represented, the right to understand why you're being audited, and the right to appeal any decisions. You also have the right to record conversations with IRS personnel. Consider audit insurance. Some tax preparation services offer audit insurance that will pay for professional representation if you get audited. This might be worth considering if you have a complex tax situation. Lastly, know when to settle. Sometimes it makes financial sense to agree to small adjustments rather than fighting them, especially if the cost of professional representation would exceed the disputed amount. The bottom line is this: the IRS now has artificial intelligence that's likely better at finding tax issues than human auditors ever were. This technology is being deployed right now, and it's probably analyzing your tax return whether you know it or not. But here's the good news. If you're honest, well-documented, and careful about your tax preparation, you have nothing to fear from this system. The AI is designed to catch people who are cheating, not to harass honest taxpayers. If this video helped you understand what's happening with IRS AI and how to protect yourself, hit that like button and subscribe for more tax and financial content. Drop a comment below if you have questions about specific situations. Thanks for watching, and I'll see you in the next video.